Okay. Good evening, everyone. Thank you very much for joining us at the webinar. The subject we are going to talk about it today, financial coaching, my financial coaching program. So let me introduce myself before that. I'm Madani Aryam. As an experienced finance coach, online course creator, I empower others to master authorship, accounting, business management, drawing on a decade of industry expertise. I guide small business owners and individuals in building lasting money habits through daily practical steps in budgeting and debt management, enabling personal growth and business success by fostering financial guidance and preventing mismanagement. My clients have achieved measurable financial improvements and shared real success stories working with me. I now offer free sessions designed to address individual challenges and teach critical skills to prevent business-threatening mismanagement. I empower clients by teaching personal finance basics, enabling informed budgeting and debt resolutions, and helping set clear, realistic short-term goals, such as saving for emergencies or reducing debt. Anyone who wants to improve basic money skills should consider taking from me. Now, let my co-host will introduce herself and then we will share the slides.
Hello, everyone. It's Giedre here again, assisting Vazani tonight with her yet another webinar about financial coaching. So this time is going to be a little bit about what exactly Vazani does usually on her day-to-day basis. And I hope that you already see the first slide where we will just explain what is financial coaching. Vazani, back to you.
Empowering clients to take control of their financial future. That's what I said just in my introduction. I will empower clients to take practical decisions and personal finance basics they have to learn. All those will help them to learn about, have control over their financial futures, guide them toward practical and everyday habits. A lot of people struggle with the money habits, and because of that, they fall into debts. So we are here to help them. Clients can make smarter choices, improve behaviors, money behaviors. They learn saving, paying off debt, but from my coaching sessions, they will learn how to pay off the debt and how to keep control of the debt or crediting emergency fund or creating emergency fund. What's the meaning of emergency fund is, it is very, very important in everybody's life. Otherwise, you'll be touching your main funds or credit cards or borrow from others. If anything happens, you meet an accident or something happens to the house or anything like that, you need funds. Emergency funds should be set in a bank where you can separate bank account where you can access the money as quickly as possible. Personal finance basics, I will go into the personal finance basics later on. Enabling informed budgeting and debt resolutions. They can do.
So let's start with budget planning. Let's explain a little bit what budget planning is. If my system allows to move on to the next slide, just give me 1 second.
Then the next one is about budget planning. There are 3 types of budgets: surplus, deficit, balanced budget. Surplus budget means you have earned more money than the expenses. What will you do with the profits, earned profits? You have to go into savings and investing. Savings means start with a emergency fund. Let me go back again. You can serve, but you have earned profits because you have done a surplus budget. Profit means you have got extra money. Compared to the income, you have made more money. That means you have surplus money in your hands. If you have debts, the first and foremost thing is pay off your debts. The balance you can put in emergency funding, retirement funding, and then savings and investment. Deficit budget, incurred losses, you have incurred the loss. That means the expenses are more than the income. That means you have to increase your income and cut down your expenses. Check your expenses. Balanced budget means income and expenses are equal. It is good, but in the long run, you will have no money for your savings. But it's a process of developing a budget. The companies, what they do is they look at the past of previous year's balances and make a budget. That is easy. That's an easy job. If you are completely new to budgeting and business, you must know how to set up the budget. So, for example, you are thinking of starting a new business. That means you would have written a business plan. When you write the business plan, you will know about the income and the expenses. So put it down as the budget. Prepare a spreadsheet. Use Excel and put it down in one of the first two columns, and then what your expenses, monthly expenses, put in the other column. That is income and expenditure. Debt is also another priority in the expenses. So add all the columns and what is remaining. Compare the budget and the actuals, what you have written, what you have actually spent, actually received. If it is a surplus budget, deficit budget, I have explained about that. That is what you have to do. How is a personal budget prevents you from getting into debt? Say you are an employee and self-employed. Say if you are self-employed employee but self-employed, and you know how your monthly income will be, and you know how your expenses will be. Keep that under control every month. Keep that under control. That means it will prevent you from running into debt. Learn the importance of cash flow. Cash flow means the daily income and the daily expenses. End of the day, you have to check whether it's a cash flow, is a deficit or surplus. Continue to check all that to, to keep yourself under control, keep your expenses and everything under control, prevent you from running into debt. Let us move on to the next slide.
So, as Vadanim mentioned already, debt is very important part of budgeting. Let's talk a little bit about debt management in this case.
Debt management. There are types of debts. Debt management is not that you have to organize yourself. You have to organize yourself. You have to make sure you are living within your means. You have to organize yourself to make the monthly payments. How will you do that? Set up a budget. Budget is a livelihood thing for anyone to keep them under control. Set up a budget and then keep yourself under control with the debt management. Allocate, if you say, for example, you have 3-4 debts, allocate one amount in your budget. Say, for example, you are allocating, your income is £6,000 for a month, and in debts is, you are making a payment of debt about £2,000. So put that separately in an account and make sure that you may allocate the £2,000, the lump sum amount, for all four debts. That is how you have to move. You have to do it monthly. A careful allocation, careful budgeting will help you to keep your debt under control. Keeping debt under control doesn't mean that you are paying off your debt. It also means that you are keeping your money habits under control. That's what. Student loans at home mortgages are high interest credit card, that is like an investment. Home mortgage is an investment because the prices of houses will go up and up. And student loans is an investment because you are getting qualified. You are using that money to get yourself qualified to get a better job. But that said, high interest credit card, personal loans, payday loans are very dangerous things. You have to pay that as soon as the first thing you have to pay that as soon as possible when you start working. Otherwise, the debt will escalate and put you down, take you down all the time. Next one is
So let's step back a little bit and overview what is personal finance and how does it work?
first, what is personal finance and how does it work? Personal finance is a, let me look at that thing. Sorry. Personal finance is the money you have to pay your pretensions. That means you have enough money to pay your bills. The significance of personal finance is what is the control over the personal finance? What is the control over the personal finance? Personal finance includes your income, budgeting, invent a budget, pay yourself first, limit and reduce debt, only adapt what you can repay. Invent a budget means create a budget according to your income. You must know your income. That's personal finance. That's personal finance strategies. Invent a budget means you have to use the rule 60, 30, 10. 60, 30, 20, sorry. Oh, oh, 60, 30, 10. 1 minute.
50, 30, 20.
60, 30, 20. It can't be 20. It's 100. 30, anyway, 50, 30,
50,
20.
30, 20. Yes.
20, yeah. 50 is for the emergency, not emergencies, regular expenses like mortgage, rent, electricity bill, water bill, all those things, transportation, all those. And 30 is for dining out and other sort of happy expenses. You have to keep everything under control. And 20 is for savings, paying off debts, savings, emergency funding, retirement funding. So when your income, say for example, if your income is $1,000, 500 is for usual expenses and 300 is for the things I have been talking, dining out, buying clothes, buying shoes, and those things. And 20 for the savings. If you have debts, you have to use the 20 to pay off your debts first. And then think about the expenses. Think about the savings, emergency fund, and retirement fund. No, your income, first pay yourself. You have to pay yourself first, of course. When you get the salary, you have to pay yourself first to live your life. Limit and reduce the debt. You have to limit and reduce the debt. That is one of the important things in any part of the money habits, money lessons. Only adapt what you can repay. Don't commit yourself for too much of payment, too much of debt payments, because if you cannot pay, it becomes a disaster again, because when you cannot pay the debt, it will escalate again. So keep the amount, stick to the amount that you can afford to pay. That's what we are trying to tell. Financial freedom.
So let's talk about financial freedom a little bit, what this state is about.
Financial freedom. What is financial freedom? Financial freedom, the people, a lot of us have financial freedom, a lot of us do not have financial freedom. What is financial freedom means? You have enough money to pay your monthly bills and savings, and you have enough income to cover those. When you are, say, for example, when you had problems throughout your life, at some stage you achieve this You have all the money to pay your bills with no worries, no fear, and pay your and savings, put the rest of the money in savings, emergency funding, retirement funding, savings and investment, and you have enough income to cover all that. There are a lot of people who have financial freedom. Those people will not have any health issues, mental issues. They are free from all that. That is what is financial freedom. But we have to know how to achieve the financial freedom. Achieving financial freedom is not difficult at all. Comprehend your spending. You have to understand your spending. You have to be aware of your spending. If you are not aware, if you are not sure of your spending, you are not putting yourself, you are not going towards financial freedom, you are putting yourself in trouble. To build a, because you have to understand the spending to build your roadmap. How will you build your roadmap? Right size your budget. Invent a budget according to your expenses, according to your income. Build your income, increase your income. Say for example, you are having 9 to 5 job. What do you do after a 9 to 5 job? People watch all the time, watch television and go out with friends and enjoy their life. That is not real enjoyment. When you have commitments for the later life, you have to increase your income. You can do work from home. There are so many ways to earn the money from home when you are free. Get some help from the people who live around you. And when you are, that said, do not ever neglect your job. Keep your job, look after your job, and at the same time, build your small income from home. When that escalates, and then you are 100% definite your income is, your business, home business is very good, then you can cut down the number of hours, then you can continue to run the business. At some point, move the business from home to some other location, and you can think about, later you can decide about your job, what to do with your job. Save for emergencies and retirement. I have spoken about it. Emergencies means I have said that retirement is one of the most important thing. People normally start employment at the age of 25. The day one, you get the salary, first month salary, start contributing to the retirement fund. Maybe your employer has the same amount contributions. Leave that. That is nothing. That is not definite, but your contribution should be definite. Choose appropriate accounts. Right. We are going to put savings and investment. Investment is a very good thing. It brings wealth to the people. Wealth, it makes you wealthy. But at the same time, it can destroy you also if you are not careful with the accounts. That is what we always advise. You have to, people think that I have finished my degree and I don't need to study anything. That is wrong. The life is keep learning all the time. For savings and investment, you have to learn a lot about investments. That is what you have to keep learning. Tackle your debt smartly. I have spoken about how to pay the debts off. Negotiate with if you find it some difficulties in paying off your debt, negotiate with your supplier, creditor. Keep learning of investment, savings, comprehending your spending, everything is important. It is never, these things are not taught in schools, in colleges or anything like that. So you have to make yourself to become aware of these things, to learn and to to have a better lifestyle, to have financial freedom. Financial freedom means you are having a better lifestyle. The next one.
So, working towards financial freedom, wise money management is very important part of it. Let's overview that a little bit.
Next is money management. The results of effective money management. When you learn to manage your money, there are people struggle with less income. That is understandable. People earn a lot of money, but still they struggle because they lack the money management skill. That is what. So money management skill is one of the important skills in life. What is money management? You are all phases of life. you know how to manage your money. For example, children are there, they're training, they are studying, their school fees and all that. You have to, how to organize your money management. How will you do that? That is also, you have to use the budget. I have said budgeting is an important. Without budgeting, nobody can run a better life. Knowing where you are at, you must know your assets. What is assets? Your car, your house, your car, house, bank account, emergency funding, retirement funding, and savings and investments. Those are your assets. And liabilities are your mortgage, credit card bills, personal loans, maybe some of the debts if you have, all those are liabilities. So total the liabilities take off from the assets, that the result is the net worth. That is your net worth. People, if your net worth is positive, you are spending your money carefully. That is what it shows. If you are negative set net worth, your money management is wrong, and you can, if with learning to how to manage the money, you can turn that into a positive net worth. Fine. When you learn to manage the money, you will have financial stability. Financial stability means you have no, it's something like you have no worries about the bills. That is the stability. Achieving goals. Say you want to buy a new car, brand new expensive car. You can achieve the goal by learning how to manage your money. Debt management. The money management will help you how to manage your debts. Investment. When you manage the money and with a budget, you will know how much money left for you for the investment opportunities. Financial independence. You have to have financial independence, risk management, and also the best part of the thing is you will have peace of mind. Money management gives you peace of mind. Financial literacy.
Yeah, so let's move on to the very important topic that Wedden already mentioned. Neither schools nor unis or colleges are giving enough credit. That's financial literacy.
Financial literacy, yeah, right. What is financial literacy? Do you want to become a financial literate? Financial literacy means learning all about finance, management, money management, debt management, funding, savings, and everything. You become aware of all that. When you study about all that, you become financially literate. People think I do the budgeting. So I don't need any finance. I'm a financial literate because I do the budgeting. That is wrong. Financial literacy covers lots of things like credit rating, savings, investments, also budgeting, and a lot more things financial literacy covers. So budgeting only does not cover the financial literacy. People think, is it too late for me to become a financial literate? I'm too old. No, at any age you can become a financial literate. At any age you become a financial literate. That will help you to have a better life. When you become a financial literate, you have a better life, better mindset you will have. Do I need specific math skills to be financial literate? There is no math skills. You don't need any difficult skills because only calculating your income and the expenses and the balance, all those, keep monitoring those, that is not a difficult skill. Isn't financial literacy only important for people who make a lot of money? No, that is wrong. Financial literacy is important for each and everyone who are even starting from the age 13, 14 years, the children have to learn about managing their money. They become, some children, when they are young itself, they become a financial literate. So financial literacy is very important for anyone. Is it enough to just put my money in a savings account? Of course, putting savings account is a part of financial literacy, but I said about savings investment, you have to learn what are the things there, what are the problems we are facing, what are the better products are there for me to put my money in. So you have to keep learning about investments. Investment is a long, s- uh, long chapter. You have to learn very well about investment because otherwise you are throwing your money into. I have seen people, very educated people, I have heard about them. They put money in some wrong investments. They have lost all the money, thousands of thousands pounds. I have heard about that. So before investing the money, you have to learn about it very well. You become aware of it.
Yes, that's for sure. So let's move a little bit to financial goals now. What types there are, how to set it and achieve it, if that.
Financial goals. Time is 8:30. Oh, I'm going to make it quicker now, very short. Setting financial goals is like you have to first, before trying to set your financial goal, you have to have a financial plan. That is income, expenditure, everything you have to take into account and make a financial plan. Then type of financial goals, short-term goal, mid-term goal, long-term goal. Short-term goal is within 1 year, you want to buy a TV or a computer. Mid-term goals, you want to buy a car or something bigger. And long-term goals, yeah, you want to pay off your mortgage or pay off all your debts. That's a long-term goal. Short-term goal is within 1 year. Long-term goals takes 5 years, and long-term goals may take much more than 5 years. See, they are asking us to end it. What shall we do?
It's all right. We still have 10 minutes left. However, just to mention again that this is exactly what Wazani does as a financial coach. So this is just an overview. And then if anyone wants to know more about this, they can always reach out to her and
Yeah.
get her services. So if you want to move
And
on to
how to build
very
business credit is a very
yes,
important topic.
that is very important part, isn't it? So if we can just quickly
Yeah.
overview this one.
Yes, only few sentences I will tell. How to build business credit in the right way. Say, suppose you are a young person, you have got a credit card. You have to make sure you are not using the credit card to the full amount. You are making all the payments regularly without any wrongdoing, and do not ever go beyond the limit. Regular repayments, you have to monthly set up the direct debit monthly payments. Keep it regularly and make sure the credit card the bills are not going to spoil your credit. If you get a bad credit, what will happen? Bad credit means no lender will look at you. You will never get a credit card. You will never get a loan. So how do the credit score work? Credit score. These all of us, the people who in this, I'm talking about England now. In this country, there is a credit card agency called Experian. They take all your records and they have the record about your credit score. What is the score? Low score, middle score, high score. And the lender, if you apply for a loan, the lender will reach out to Experian and get all your details for years and years and years. They will check it all that. And in the end, they refuse to pay them because they want to save themselves from troubles. Right. Let me move on to the other one. So maintaining the
So
credit.
it
Yeah. All right. Okay.
are we talking about investments now?
Yeah. Investments. In, investments. They are covering my this thing. Shut up. Taking the next step in investing, type of investment, stocks, bonds, funds, trust, alternative investment, derivatives, commodities, comparing investment styles, whether you are going into active or passive, growth, value investing. Some way of investing will not grow fast. Some way of investing will grow fast, like stocks, bonds, funds. I don't think it will, some of them will grow fast. That is also, that is what I am insisting. Everybody will have to study comprehending investment, understand and learn about investing before throwing your money into the investment. Investment trust. Yeah. Comparing investment styles, whether active investment or passive investing. Some people are scared to invest in dangerous things. And some people want to invest in careful things. That is the passive investing. This is the active, no, that is the passive investing. That's the active investing. Growth versus value investing. That depends how it grows and what is the value you get from the investing. Next one. Understand risk tolerance.
Yes, so we still have 5 minutes, and then we can cover understanding risk tolerance in this case, which is
Yeah.
closely related with investments that Wavani just mentioned about.
Know your time sphere. That's what. Understand risk tolerance means how long you can say, I'm putting 10,000 pounds into the investment. I'm waiting for the return. How long I can wait for the return? Can I wait for the return till I'm alive, the last minute of my life? Or I want to give this as a uh, gift to my children. So that is, some people want the investment as quickly as possible. That is a different thing. So some people leave the investment for long, and some people use it at the end. Some people do not use it. What is risk tolerance? Risk patience. Risk patience means you are investing some money and active investments. That is called the active investments. Some people do not care. They just put the money, and even if they lose, they know if they leave it for long, in the end, they will get money. That is the violent risk tolerance. Reasonable risk tolerance means the people are careful, they're reluctant to put money, they take time, they think about it, which one will give me money, and they think about it. And traditional risk tolerance, this is good for pensioners. Pensioners, if they want to, when they retire, and if they have money, they want to make more money, they put into the risk tolerance, and they get the money back. But the thing is, they do not have much risk. Reasonable risk, they have some risk, but not active tolerance. They have lot of risk at the same time. They get a lot of money also when they do it carefully. What is an impact of 60-40 group formation? That 60, I've forgotten about it. I have to leave that now. I mean, if you have a money, fine.
So just to quickly mention that it would be 60% to shares, 30% to pledges, and 10% to cash.
Yeah, that's right. Yeah, you're right. Yeah. Thank you for helping me. What is monetary tools are what monetary tools are considered? Tell me, high risk investments, how does risk tolerance relate to risk capacity? Risk tolerance, these things are.
So just to summarize, while risk-taking actions reflect an investor's readiness to take risks, their risk dimensions determine their financial ability. And that is also part of all that financial literacy that we spoke about. And again, this is something that Revenue would cover in her coaching sessions. So if you want to say something more for tonight's webinar, Revenue, or are we okay to wrap up now?
Yeah, I think it's better to close this now because when we are talking, they will stop it. So better to close it now. Yeah. Thank you for watching, listening to our webinar.
Yes. So again, as mentioned, those are very important parts that you cannot really uh, look at and explain in such short period of time. There are
Yeah.
many things to consider, whereas it might to some it might be very easy when once you learn about it, but sometimes you don't even think about it. You don't even know that you need it.
Yeah.
Whereas others might need more understanding, more explanation. However, nowadays we are all left by ourselves, to learn everything by ourselves. Sometimes we might feel overwhelmed, don't know where to start even. So again, financial coaches are for that, for those kind of situations. And I believe Vadani's contact details are available as part of the invitations, and will
Yeah.
be shared
You are
wherever
also
she shares the
finance.
webinar on.
Thank you for
Thank you
listening.
so much, Vadani, for your time.
Thank you so much
Uh,
for helping me. Yeah. Yeah. Shall we stop it and talk on the phone?
yeah, yeah.
Oh,
Have a good evening, everyone.
yeah. You too. You too. We